Tesla stock buybacks are likely, according to Stephen Mark Ryan from Solving the Money Problem. Let's take a look.
Tesla announces a share buyback in the near term, the next few quarters. One, I personally won't be surprised at all. And two, I think the stock market will be very surprised.
The timing of the buybacks, that's important. And Stephen, he thinks that buybacks would be financed, that Tesla would basically raise money. Now, if we look at this chart, would Tesla want to buy back stock at $400 per share? I don't know. Maybe not, because we will look at PE ratio in just a few moments, but let me just get through this first. But here, it makes a lot more sense. I mean, Tesla does have many ways to use the money right now. Tesla needs to build new factories. Now, this level here makes even more sense, and it's very likely it will drop down here. Again, nothing is guaranteed with Tesla. Tesla is so volatile, very hard to predict anything short term, especially if there's a new FSD version and full self-driving just starts to work, then the stock will shoot up straight up. But if you take a look back here, Chicken Genius Singapore, who used to be a super hyperbole of Tesla stock, and now he's not buying any, he sold everything. He even shorted Tesla stock from right here to down about here, and he made some money. Respect for that. Who you can't hate on someone when they make money. Me as an investor, I fully respect that. It's something that I would never do as an all-in Tesla stock investor because I don't want to bet against the smartest man on earth, Elon Musk. Now, right around here, this is why I think this is why I would tell my grandma to buy Tesla stock at this level. At this level, I believe if Tesla does not do stock buybacks, I think they would be not doing what they are supposed to be doing for their shareholders, because let me explain this chart. So if we go over here, we scroll down, we want to find the current PE ratio. This is trailing 12 months, 80.32. And what we really want to look at here is this forward PE next 12 months is 44.45. Now, I know I have a lot of new investors watching this, so let me explain what this means exactly, and you will see how it would be so insane for the stock to drop below that 120 line. So 80 PE ratio, a lot of people say that's a very high PE ratio. You're paying so much for the profits that the company is generating. It would take you basically forever, your whole lifetime, to make your money back. That is if the company did not grow. However, this is the forward PE ratio. So we take the earnings and we look at the past and we project basically similar growth to the future, and we get a PE ratio of 44.45 in the next 12 months. Now, why is this important? This is Apple stock, and if you look at Apple's PE ratio of trailing 12 months, it is 23.15. Now, what's even more interesting, when we look at Apple's growth, we look at revenue growth year over year, barely 2%, not even 2%. The only thing that's really up is operating expenses. Net income is down, net profit margin is down, earnings per share is down, EBITDA is down, basically everything is down, and you still have that PE ratio of 23.15. So this is a company that is not really growing anymore. And you can go through a few other ones and you will basically see various similar things. Companies with PE ratios such as Apple, but the growth is not really there anymore. And it is understood, this is Tesla's numbers again, that the higher the PE ratio is, you can justify that if there is a lot of growth. And Tesla has projected growth basically of revenue of 50% per year, and because of that, margins and profit will also tag along with revenue. So if the stock drops down to 120. So basically it would be almost about half from where it is today. So let's just keep the numbers super simple and let's just divide everything by 2. So if the stock on Monday, when the market opens, drops by 50%, the current PE ratio would be 40. The projected forward PE ratio would be 22. This is from a company with 50% year-over-year growth, with strong positioning in the industry. And listen to this. Tesla still has many already known and very well understood measures to save costs that have been proven to be effective but have not been scaled yet and implemented. And even with that, we have those insane margins. So I'm talking about 4680 batteries. I'm talking about gigacastings. Now they're even removing the sensors. So, you know, when you park and you hear those beeps, like beep, 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 when you park, they are removing those sensors, and they are going to be relying on just the existing cameras that are already in the cars. So that will save money on wiring and setting up those sensors. And of course, the actual sensors will also save, we will save money on that. So there are many more cost saving measures that are going to be implemented. So the margins are only going to get better. Even if you say, okay, there's a demand problem, which I don't think there is, but let's say there is a demand problem. You are implementing those cost-saving measures. Even if you reduce the price, the margins are still going to stay the same, the revenue growing still at the same level. So let's come back to this, and let's just see how ridiculous it would be for stock to drop another 50% down from here. Then the forward PE ratio would be 22. So you are telling me that a company that is growing like crazy, that will expand many more times from where it is today, is worth as much, basically, what you're paying in terms of PE ratio, as much as a mature company such as Apple, where we don't see much of the hope to grow in a very significant way. Definitely not 50% year over year continuously for the next few years. So if a stock was to drop that much more, I would have a very hard time to imagine and justify why Tesla should not buy back the stock. A few more things that you have to understand here. This current PE ratio, that's trailing 12 months. Each quarter, basically, unless there is some sort of disaster going on in the world or in that specific area where the factory is located, assuming that that is not happening and the world is not ending, the most recent quarter is always going to be a much more profitable and bigger quarter. So Q3 is probably going to be the best quarter that Tesla has ever had in terms of earnings, in terms of revenue, in terms of deliveries. We already have seen that. So if we annualize the Q3 earnings, we already have a PE ratio that's going to be better than 80. So already you're not really paying for an 80 PE ratio if you are comparing a mature company to this company, to Tesla stock. And if you really believe in the growth, then this is basically what you're paying for, in a way, you could say. However, there is one issue with stock buybacks. If, like Stephen Mark Ryan from Solving the Money Problem suggested that financing would be used, the Fed is raising the rates. Now, right now, the rates are not crazy high, at least not yet. But if the Fed keeps raising the rates to insane levels, then that might be a lot more difficult. Now, stock buyback from cash flow, that's a whole different thing. And even that might make sense. However, here's another thing that happens, and this is why we also see downward pressure on Tesla stock due to macro. Then the interest rates go up. It also means that bonds pay you more money. And when you compare the return from bonds, and the return is higher, and you compare that return to the stock market, which is going down, and it seems to be risky, but bonds are paying a rather attractive potential return on investment now. A lot of people switch from stocks to bonds. So that's another reason why high interest rates have this downward pressure on the stock market. Now, at this very moment, I have 0 bonds in my portfolio. I only have Tesla stock in my portfolio. And many of you point out in the comments that is not a portfolio because that's only one stock. The reason why I say that is because I want everyone to understand that I also have other assets other than my stock portfolio. Then I look at those numbers, and if a stock really does go down even further, I see insane opportunity that everyone is seemingly missing. And every time I get this feeling where I see something that people are not seeing, that's when I know I will make a lot of money. At least so far, every time I made millions, where my net worth increased by many millions, that's exactly what happened each time. This time, maybe it's going to be different. This is not a promise or any sort of guarantee. This channel, of course, is just for entertainment purposes only. Because for me, it's really entertaining to watch my portfolio do what it's going to do over the next 5-10 years. I'm a long-term Tesla stock investor. Now, I think I am also getting a good deal when I buy Tesla stock at higher prices. Even if I buy it at 300 or even 500 and higher, I still think I am getting a good deal. I explain that in here. I show you what would happen, in my opinion, to my Tesla stock investment if I buy it at 3 different prices. All those prices are basically higher than where we are right now. And I also explain why Tesla stock is a safe investment for me. Click on this video. My name is Matt Posius. Thank you for watching.